You know that saying, make your money work for you? What does that even mean? Well, today we're going to crack that code. We're going to find out how you can take a little bit of cash and help it grow into a whole lot more. Ready? Let's dive in.
Okay, so picture this. You've got a 100-rupee note, maybe from your birthday. What do you do with it? You could just stick it in a drawer, right? But what if you could do something way cooler? What if you could plant that 100 rupees and watch it grow? Almost like a magic money tree. Yeah, that's what we're talking about today.
All right, let's start with a super simple idea. I want you to forget all the big, confusing money words for a minute. Just imagine a giant piggy bank that everyone shares.
So you take your 100 rupees and pop it into this giant piggy bank. Then your friend does the same, and another friend too. Suddenly, it's not just your small savings anymore. Nope, you're all part of this one big, pooled pile of money. And when you put it all together, you're way more powerful.
And guess what? This awesome group piggy bank actually has a real name. It's called a mutual fund. Now, you might hear some really fancy-sounding words for it, like collective investment vehicle. Whoa. But don't worry about that stuff. All it really means is a bunch of people putting their money together to invest it. That's it. Simple, right?
Okay, so you've got all this money in the piggy bank. You don't just let it sit there collecting dust. The group gets a super smart expert to manage it all. This person is called a fund manager. Just think of them as a really clever uncle or aunt, someone whose entire job is to figure out the best places to put that money so it has the best chance to grow.
So, what does this smart fund manager do with all that cash? Well, they spread it out. They don't just put it all in one place. They might buy something called shares. Think of a share as a tiny, tiny slice of a huge company, like Reliance or Infosys. And get this, when those big companies make money, your tiny slice becomes worth more. How cool is that? They'll also put some money into other places, like big, solid banks. The whole idea is to spread it around to keep it safe and help it grow.
All right, we've got the pooled money, and the fund manager is investing it. But how does it actually grow? I mean, what's the magic here? Let's break it down with a couple of really simple stories so you can see exactly how it works.
Let's talk about chocolate. Imagine 5 of you each put in 100 rupees to buy a giant basket filled with all different kinds of chocolates. That's 500 rupees in total. Now, let's say after a little while, those chocolates become super popular and hard to find. The whole basket is now worth 600 rupees. See what happened? Everybody's share grew, and you all made a little profit. A mutual fund is kind of like that, but with money instead of chocolate.
So when you put your money into the fund, you get something in return. They're called units. That's just the official name for your piece of the pie or your special share of that big piggy bank. The more money you put in, the more units you get to own. Makes sense, right?
Okay, let's look at a real-life example with some actual numbers. Say you invest 1,000 rupees. The fund manager puts it to work, and after about a year, boom, your 1,000 rupees has turned into 1,150 rupees. That's 150 rupees of profit. And you didn't have to do anything except put your money in there and let it do its thing. That's your money working for you.
You know, when you invest in a mutual fund, it's like you get some awesome investing superpowers. Seriously, let's check them out.
Superpower number 1, not putting all your eggs in one basket. You've heard that one, right? Instead of risking all your money on just one company, which could be a little scary, a mutual fund spreads it across lots and lots of different companies. It's just a much safer way to play the game.
And your next superpower? You get an expert on your team. Look, trying to invest all by yourself, that takes a ton of homework and time. You have to be a real expert. But with a mutual fund, you've got that smart fund manager doing all the heavy lifting for you. You get all the benefits of their brain power without having to do the research yourself.
And this might be the best superpower of all. You don't need a mountain of cash to get started. You can literally begin investing with just 100 rupees. 100! That means this isn't just for rich people. It's for absolutely everyone.
And the last superpower is time. It's a big one. See, when you leave your money invested, it doesn't just grow. The money it earns starts earning more money. It's exactly like planting a tiny little seed. If you just give it time and you're patient, it can grow into a giant, strong tree.
Okay, we've talked about all the cool stuff, all the superpowers. But now we have to talk about the single most important rule of all. Seriously, this is the golden rule. You have to remember this one.
So here's a question for you. We've seen how the money in the piggy bank can grow, but does it only go up? Is it always a smooth ride to the top?
And the real answer is, nope, not always. The market has good days and bad days, kind of like we do.
So sometimes the value will go up and sometimes it'll go down a little. And you know what? That is 100% normal. And that's where that golden rule comes in. Every single expert will tell you the same thing. You have to be patient. This isn't a get-rich-quick thing. It's all about giving your money enough time to ride out those ups and downs and really grow.
So, the biggest secret to winning at this isn't some crazy math problem. It's just patience. It's about thinking about the future, not worrying about the little wobbles that might happen day to day.
And there you have it. The secret of the giant group piggy bank is out. Just understanding how your money can grow is the very first step on a really exciting adventure. And you know, every great journey starts with just one small step. So the only question is, what's your first step going to be?